Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. OptionsGeek LLC is not a broker-dealer. OptionsGeek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey, Felix. How are you?
How are you? How you doing? All right?
Good. Monday, always the best day, you know?
Yeah, snowing over here. Huge
Yeah?
snowstorm over here. Yeah, big snowstorm. It's like, I don't know, maybe biggest in the last 5-6 years. So it's...
Damn.
Yeah.
I hope there's no connection problems, so you get broken down or something.
Yeah, well, let's hope now. Let's knock on wood.
Yeah,
all right. So
okay.
What's going on? What do you see today? Let's just jump in it.
All right. One thing I see, which is kind of against the grain, in my opinion, is BLNK puts. So if you want to take a look at those. Yeah.
Yeah, you know what? I did see that. Hang on one second. Let me, I was looking at, you have my screen here?
Yes, I do.
This is good.
Yep.
Okay, so I was looking at another one here that we're going to talk about in a second. But so we're going to, you see the BLNK, we're going to jump into the CCJ next because I think that one's pretty interesting. But let's talk about BLNK. So BLNK, let's just find it here. Where is it? BLNK is a big put spread. Okay, so we're really focusing on this one right here, right? The February's 58,000. You see that?
Yes.
Okay, so we'll go to 58,000 here, and then we're looking at. I'm gonna remove the shading here because this one traded over here, the 52.5 puts. So 25,000, 52.5 puts here, 26,000, 35 puts there. What's going on? So it looks like, I mean, we'll look at the top one first. 25,000, 2.5 million shares worth at 52.5. It's a lot for this name. So 25,000, that's 10 and a quarter. They paid 10 and a quarter on 25,000. It is a spread. They paid 197 vol here on this. So it's 49.93. So they paid an offer 10 and a quarter. 10 and a quarter. And write that down. And let's look at what they did over here in BLNK. Okay, now BLNK. Again, 25,000, 105. So 10 and a quarter and 105 is $1.20. I'm sorry, $9.20. $9.20 for that spread. This traded 100% on the bid side or close to the bid side. So 49.93 reference, 152. So they bought 25,000 of these put spreads. And then the question now we're asking why. What's interesting right off the bat is, again, really, let's just go through the motions real quick. You saw the bid, the offer, you see 25,000. Also, this increase in implied volatility helps you, also gives you a clue that these are being bought. But the really interesting part, I guess, is why are they buying February? So my first guess is if I see earnings are in June, when's the next earnings date? Now, sometimes this doesn't pick it up, but you know, if the next earnings is in March 31st here, right? March 31st, then why is someone buying February put spreads? What I would say is, and I think everyone who's been following us here would know that we are, let's just take a look at the BLNK chart. We have been talking about these EV names, obviously for a while. They've been all over the UOA. But one thing that we've talked about is things like something like NEO, where, and this is a weekly here, I'm going to change it into a daily, but these are the EV names. These have been the hot names. And we saw last week, a week and a half ago, we've been seeing sort of options activity that would not be so bullish. It didn't seem like it would be so bullish. It seemed in the last week and a half that there's been a lot of, we saw some, I think it was about a week and a half where we saw some longer term calls being bought, 6-7 month calls. That's telling you that I don't think that there is a lot of momentum in the near term. I don't necessarily want to completely get out of the stock just in case it doubles in my face, but I'm going to buy these longer term calls and I'm going to risk manage my book. So if I'm long, I've bought a lot of stock down here and all the way over here. My average is about 27.30. Now it's a double. I'm going to reduce my stock position by a third, 33%, and I will carry these calls and I'll pay $10 for the calls or $15, whatever they were paid. So this is sort of the type of trading that it feels like. It feels like someone is taking, not saying it's going down, they're just taking some profits on their stock and they're flipping into these call options. We saw that in NEO. I showed you that LI has not been trading well, as you know, as another Chinese name. They've not been trading well. XPEV, very similar. Again, I'm not saying they're going down because I don't know, but I'm telling you that when we spotted this over here, the go momentum bull calls weren't really the ones that we were highlighting. We were highlighting this, hey, people seem to be exiting here to some extent, whether it's a stock, but the option plays are not after analyzing them, they're not saying go right away. So somebody might be selling the stock here, just getting out of stock. You see these things are starting to, they trade higher. You see these wicks up above and then the red bars, they trade higher and then they come off. They open, trade higher, come off. This one actually held the 50-day and then this one broke through. This one opens up, trades higher, and now it's trading near the lows. So these are under pressure. These Chinese names is the way I see it. BLNK is something that is, do you know what BLNK is? BLNK charging?
Yes, I do.
So BLNK charging, let's just take a look. I didn't really know too much about it. So the first thing that I do when I think I want to do this, even though you may know the stock, the first thing I do when I'm looking at these things, because now we've looked at the options, we understand that they're betting lower. They paid $9.20. Let's go back to those options. They paid $9.20 on this 52.35 put spread. The maximum that can be worth is how much? 52.5 minus 35 is 17.5.
17.5, yeah.
Right, that's the maximum it could be worth. It goes to zero, it's only worth 17.5. It can go to zero. If BLNK goes up to 100, then that put spread goes to zero. So net, you're laying $9.20 to get short the stock. And the most you can make is basically $8.30. So that is almost a coin flip. It's a little bit in the money. So some of the in the money, you can take that out. But the way I look at that is it's almost a coin flip, heads or tails. But because we know what? We know that the big guys don't flip coins. That's not what they're doing. They only flip coins when they believe that they have reason to believe that their side of the coin is heavier weighted, right? Heavier weighted, then that's why they do it. So here's another play, even though the stock BLNK, now we take a look at the chart, is going down, they believe that it's actually going back down to right around here. Now, what I find interesting just by looking at this is that 35, right, happens to be what? Happens to be that level that I call it a pivot level. This is the old high, whatever you want to call it. I skipped a beat of my own drum. I call it a pivot level. I look at this and say there was something going on here. Whatever it was, they decided to sell. Then over here, they were buying it, and then it went through here, and it actually just blew right through. So I would have said 17.5, 35. So 17.5 right here. You see this right here? Mm-hmm. If I'm looking at this, as it starts going up, I'm thinking, okay, 17.5 here means 17.5 here. And that would have given me some level of comfort to sort of get out of some stock, maybe at 52.5 right here, which happens to be, it did go to 56, but sort of you see it fell under pressure. Now it's doing it again. This, you can see 52.5 seems to be the level, goes through here, and it comes back through it. So this is, yes, this is bullish. Yes, this is, you can see this channel. If we sort of now erase all of this stuff here. Let's just start again. You could say, yes, this is the pivot. He's looking at 35. But someone might say, yeah, but look at this channel here. You got this like pretty cool channel where, it looks like it's going up. And yes, you're right, but somebody is making a bet here, a 50-50 bet almost, which is not something that people usually do for, $20 million. So what it's telling me is that they're not just going to put down 20 million bucks, $22 million on a heads or tails flip. They're probably selling some stock, or they think that there's going to be pressure on the stock over the next, call it 3 weeks. So that's how I read it. I read it as not completely negative. I read it as someone selling the stock. I don't think that they want to get out. I think that they, if they wanted to get out and they were really bearish on this thing, I don't think that they would be selling the 35 puts. Okay, so I think it's someone that is just reducing, and 35 puts seems like a good level where they would be buying stock back anyway. Okay, Is that fair?
Yeah, it is. And I just want to ask you. So
go ahead.
The fact that it's almost 2-to-1. Does that make it
1-to-1? 1-to-1. Even money.
1-to-1.
Yeah.
Even money, right? So
does that make it what?
Does that make it useful for us to, kind of try to go in ourselves and,
Look, I would say there's probably better trades out there. I mean, I don't know exactly, I think you take this as I don't personally like 1-to-1 trades. I mean, even though this might be 1-to-1 with a 70% chance, of winning, that's how they're playing it, or they just know that this is going down. This reminds me of which one? The quant scale or the quantscape, the one that we were looking at, the QS, right? They were doing similar type of bet. They were doing a similar type of bet of quantscape when we were looking at it up here, right? They were doing both. They were doing a put spread and they were selling a call spread, right? And so they were dead right? Within a week, this thing was already trading down. 3 weeks, it was trading down here. I'm sorry, this is daily. So within a week, it was basically trading. We caught it literally right here. We're talking about it.
Yeah.
And the thing traded in 5 days from 115 to 45. We talked about likely of a big seller that was just going to be trying to get out of this thing. Now, this at the time was holding 20 million shares a day. So, somebody could get out of a million shares, 500,000 shares. And it was probably, someone doing that, reducing their position by maybe the whole thing, but probably a third to a half, and it caused that move down. So we're seeing this is the same type of trade when you look at Blink. So technically, that's what we see. So we have here a situation where we're looking at the options analysis, we're looking at Blink, and I want people to see how we develop the story. So I'm not a wizard. I have the same material you have. So I want you, Marco, to understand that when you look at this and you want to see what the product is, we're playing the game. So I want you to know what Blink is, right? So if I'm looking at Blink, here's what they do. Blink charging stations for EV cars. Okay. Simple to understand. Now, what I do is I have Seek and Alpha Pro. So I basically, most of this you can get anyway for free, but I'll look at the financials and I'll just sort of look like, how much money is this? Like, as a company, revenues to me, I like revenues. When you talk about momentum, I generally think of how much money are they making, is it growing? And you look at this, it's a little bit surprising. They don't even have any revenues, right? They have nothing, right? So it's truly a dream stock. This is if it works, it works. Every charging station is going to be Blink, and there's going to be all these EV cars using Blink, like they would use. You go to mobile gas station, or you go to any one of these, big gas stations brands. So, you're talking about a market cap of $2 billion with $4 million in revenues. Now, again, the story is, what if there's a charging station at every city times 1,000 locations? I don't know, whatever it is. There's 50 million cars expected by 2030. I think the number is, what do I have for the number?
EV cars.
Sorry, EV cars. EV cars. 2030. There's 20 million. 2040, 50 million. Okay, so this is all I'm looking at. I'm looking at this and saying, okay, it truly is just a story. I'll look at why is it? Is there any news today on Seek and Alpha or on the news profile that we see over here? Robinhood with the highest short interest, 3 clean energy stocks I wouldn't touch with a 10-foot pole. So I'm looking at these articles, I'm reading. I will then actually go to, earnings. Let's see, click earnings and go to the transcripts, right? And I'm going to look at this guy's transcript, Michael Farkas, he's the CEO. So, the best place to go really is after you're looking at this and maybe read an article to just get an idea, because they're going to to shrink it, is to go right here. And, these are free. Anybody can get this. And here's the CEO. Here's the guy. This is the guy running the show. He's he's going to tell you what he thinks. And good CEOs try to tell you in layman's terms. So he's the one telling you this is where I got the stats, 50 million. Now, I may want to double check that because these guys, they have a little sleight of hand. They're like magicians, they say things and it's kind of right, but they're supposed to tell a good story. So, you read the story, you understand the dream. And then what I do is I actually go down here and I start finding, this is long, sorry for your eyes. If you're looking at this, close them for a second. Q&A. I'm looking for Q&A answer session. This is what I want to see too, right? Analysts are asking questions and they're answering them. That to me is very important. So I'm looking at what the CEO says. I don't care about the CFO really most of the time, what he says, unless there's a reason why I need to listen to the CFO, because the CFO is going to tell you numbers. And I'm not going to do that much work to say, no, that number is exactly
especially in companies
wrong.
like these, right?
Yeah, it's just I'm unless you're an analyst, a fundamental analyst, what are you going to do? Like if the guy says it's going to grow at 10% or it did this or did that, are you now going to go build models and spend the next 3 days building a model, verifying what it? No, I mean, you guys, to some extent, you just got to take it for what it's worth. But the CEO, he's telling you where the company is going to be today, 1 year, 2 years, 3 years, and what's exciting. He's supposed to be the greatest showman, right? I love that movie. So he's supposed to be the guy, the head of the circus, telling you, hey, this is what's going on. We got acrobatics, we got elephants, we got lions, we got whatever you want. Come on in. That's his job, right? He's a pitch man. He's a sales guy. So he's the guy you want to listen to. And you then, that's the story. And then you want to put it all together. You want to put the story, what we just learned about Blink Charge, and it doesn't make for a good video, but I did read this, and you start understanding what they do. You start looking at the chart, right? You start looking at the chart and seeing what's happening. And then you start looking at the actual bet. And the bet here is something that is 1-to-1. That's not terribly exciting. That doesn't mean I won't try to understand what Blink is. It's a large trade. It's a $22 million trade in premium. I want to know why is this guy doing this or what's happening, and then back it out. So once we get those three parts, then it is a little bit of experience, that I'm trying to bring from my experience from sitting at a hedge fund, sitting at the investment bank. This to me looks like someone who's long a lot of stock and they're trying to get out. He's probably going to me, it smells like a BlackRock or something like that. That's what it smells like to me. I don't know if it is, but that's, they're trying to make some money, or the traders there saying I can make some money while I'm selling the stock, and then ultimately I'll get out. That's sort of the thinking. Maybe we can take some of this money back. Okay. All right. So that's a full sort of breakdown on what people should be doing on the process and how to think about it. Let's jump into the next one, which is something that we own that is exciting to see. Finally, it's, getting another big jolt here, is CCJ. So CCJ is nuclear energy. And the story that we were going with was that in order to make a clean energy world, you need power. You need actual power, which is a little bit of the paradox because it can't be fossil fuel power. It has to be clean power. So you need a lot of clean power to make good clean power, something like that. And really where you get that power is nuclear energy, right? It's the cleanest form of energy we have. And there's no fossil fuels, no smoke in the atmosphere. So, this has been the idea. And today it looks like Bank of America, because again, same thing. I know CCJ, but I come here, I look at CCJ, and I see uranium jumps on Bank of America news. So there's a Bank of America news report. It's out. They also made, if we look at CCJ here, just look at this top news article. It talks about laser enrichment and uranium, and gets a little complicated, but essentially they struck an agreement. I don't think that has a ton because that's been around for a while, but in this, let's just take a look. What you see in here is you're starting to see, this is a PR, right? So this is put out by the companies, but what you see here is this guy, Gitzel. Let's see what's his first name. Gitzel. Tim Gitzel, Cameco, which is CCJ, and CEO Tim Gitzel makes his comments. Okay, it's commercialization, nuclear fuel cycle in the future, world-class assets can build. That's his thing. But he says here, nuclear power. Okay, nuclear power plays a massive role in global clean energy equation. In the global clean energy equation. Okay.
Yep.
Again, pitch man, sales guy. He's got to start pitching that story. So let's just put we did something here with Silex, and this is what it is, and it's been going on for years, and now we just got, they're putting it out, and today, great. Nobody knows what the hell it does, but he wants to make sure that he's telling the world that global clean energy needs nuclear, and we're right at the heart of it, and that's why we're going to make a lot of money, right? You might see in the next 4 months a lot of these PR newswire things where the company's trying to signal, hey, look at us. If you're an investor, look at us because we're going to be in the center of this whole clean energy. You have on, this is, look, just on Seeking Alpha here, shoots high after bullish note from Bank of America, talks about demand. And here's a comment with President Biden's inclusion of nuclear in his clean energy plan. The Democratic Party increasingly embracing nuclear and Republican support. U.S. nuclear plants that are planned for closure could receive federal government. So, it's just you got policy change happening, and then if you look at, I've looked. I know this from the past, but let's see if they're still there. Let's look at holdings, because this is also part of the story. Not every time, but often we look at CCJ and we see who's long these calls, like who's trading these call options, right? Because there's a lot of them. Bienville Capital Management, Old West Investment is there. I don't know who these are. I think I think that's it. I think the players that I know are these guys. Let's see here. Where were they? These guys, Bienville Capital. So I would look to see who are these people. Okay. I think these are the guys, and I think it's Fifth Avenue, 521 Fifth Avenue, New York. So these guys are, I want to see this, if they say the managers here.
I remember you digging up one idea like that when you were searching, and then
so
there was a guy who was on the board of some other company, and
you
can find some good information like that.
Yes, that was the Skechers. There was the Skechers. So you come over here. So here, let's go look at our Bienville team. 23 people in New York. And okay, so when I saw this, I didn't even realize, but so this guy, Ralph Reynolds and Billy Stimpson, he's a little bit older than I am, but Billy Stimpson was no different than me. He was a derivative options trader for Deutsche Bank, and I think someone else, but so was Ralph Reynolds. Ralph Reynolds was the head of Deutsche Bank's trading desk, and I believe he either came from O'Connor Partners or Morgan Stanley. So I know that these guys, okay, so it would make sense that these guys own calls because they are, they're call experts, they're options experts, they are people who understand the game. I did read a little bit about them. This was a few months ago, and they are looking for asymmetric payouts. And in this case, they're looking for asymmetric payouts that have to do with policy. So I don't think that they're letting go of the stock here. I think that they're waiting for this moment. They were able to buy call options very, very cheap. And now these call options are starting to get more and more expensive as people learn the story. You see the at the money implied volatility? That implied volatility, not today, but let's say, see, it's up 20, 30, this was probably 30 vol, 40 about 3-4 months ago. So what these guys do is they come in and they load up on options, 6-month, 9-month options. Now, this is a good intro into open interest, right? I just put this up, and maybe we'll take the opportunity to show this because this is what I do, right? I'm looking at it and I'm saying, okay, where are the bets? Where have the bets been made, right? This is really telling me where have the bets in CCJ been made. I'd like to see that. And then I'd like to see sort of the top 5% of bets, where they made. And you can see that there's some bets that were made in February, options, and you could see clearly where the bet's being made. Right here in March, okay? Right here in March. Now, why do you think the bets were being made? I don't have the historical data, okay? I don't have the historical data, meaning shown. I do have it, and I do look at it, but when I see something like this, okay, the first thing I asked myself is why March?
Mm-hmm.
Right? Isn't it why March? Why did they come after it? And what you'll see is that they came after these in October, in September, October. So they gave themselves 6 months. Okay. At that time, I can tell you that the implied volatility was very, very low. You could have bought hundreds of thousands of these things for like very cheap price. Okay. But they chose 6, 7 month options. Nobody's looking at CCJ. Everybody's looking at Tesla at the time. They're looking at some of these electric stock EVs coming in. So these guys, they plant themselves in March, right? That them and other people, they were really coming after these for the March options. And the question is why March? Well, if you thought about it and you see now what has transpired, they thought, well, even if Trump came through and maybe Trump wanted to, had his own policy, he was somewhat bullish on nuclear. But if Biden actually won, then policy was going to change, and it was going to change right into nuclear, right? Because they knew in order to do, if Biden's running on clean energy, right, and he wins, there's a call it 50-50 that Biden wins. 50-50 that Biden wins. But if he wins, it's like 100% that they're going to be talking about nuclear energy, because you can't have a clean energy environment without nuclear energy. So you have this 50-50 chance of winning. And if they win, we want to make sure that we're in nuclear. But you can't do that once he wins. Once he wins, all of a sudden, the nuclear energy starts going up, implied volatility goes up. So you got to be in there before. Go ahead.
Mm-hmm.
You see that?
Nice.
Okay, yes, so that's just one way to look at it. So now the next way, the next sort of like, once you understand that, the next level is, okay, how much does it cost me to buy June? Because we bought the Junes, right? At OptionsGeek, we bought the Junes. This is us right around here, the June 12 calls, right? And we bought the Junes. Now, why did I pick the Junes? Well, I picked the Junes that just in case they were wrong, just in case that they picked the wrong expiration, guess what? There was going to be a lot of calls for sale, right? And it was, in order to get through these, call it posts, these hurdles, these are like hurdles, you got to chew through 2.3 million shares, 2.9 million shares, 1.9 million shares. So this is a lot of shares to chew through, because when March comes, what's going to happen? These people are all going to be selling the options. They bought the calls. At some point, they're going to sell them. So when they sell them, because the stock goes up, that puts pressure on Cameco. That puts pressure on the stock. So my thinking is, how much does it cost to buy June? Well, if it only cost me 20, 30 cents more to buy the Junes for 3 extra months, man, I'm probably going to take that. I'm probably going to take that, because if this is, when I read it, I said, oh, okay, I see what they're doing. And then when I saw Ralph Reynolds there and Billy Stimson, oh, I get it. They're thinking, they have they're not going to be the guy that's running around the world with all the major connections with, I don't think, I know that they're expertise. They probably have high profile connections, but the other guy seems to be more of the international player, where he's getting, to understand the bigger trends. I'm not saying that Ralph and Billy can't understand it. I'm just saying it seemed like that would be more that guy's role. And Ralph Reynolds and Billy would manage the book. So all I'm saying is that I'm looking at a trend. I'm looking at a trend that they're probably looking at, and then I'm weighing the odds 50-50, and then the implied volatility is low, and this could actually be a double. I mean, it's a home run. So they start loading up on stock, loading up on calls, and they play it that way. So all this was a little bit of insurance for 25, 30 cents that I can buy the Junes, because the options were so cheap. It was like, this one was $1.50, or this one was $1.50, or this one was $1.80, or whatever it was. It's like 20, 30 cents difference. I'm going to pay that 20, 30 cents if I feel like maybe the trend has a little bit more legs and maybe I need a little bit more time. See, right now they're running out of time a little bit with these, right? They're running out of time here in the CCMJ. So if we look at what's trading today, they're trading in these Marches. And so they might be, trying to move this down a little bit. Maybe they had the 20 calls, right, in March, and it looks like they might be selling these and getting larger here. So they have more stock. They own more stock. They're buying these, okay, to open. They're buying these to open, maybe even these, but they're buying these. They're selling these, and then they're selling these to close, it looks like. You see that? So they're adjusting their risk reward now. What happened is exactly what the reason why I bought the Junes. They're running out of time. And so they know that, okay, can Cameco get to 20? Maybe. Nobody knows whether it can or can't. Maybe. But, or will it? Maybe it will, but I want to reduce I'm going to probably, if it gets to 18, this is probably not going to be worth that much anyway. So I want to start reducing my risk on the upside because I'm long all of these options, thinking that this was going to be a little bit faster and the world was going to catch on to this idea quicker and believe this idea faster. So I have to adjust, and that's what they're doing here. It still looks like they like it. They're buying the 14s. They're getting out of some risk up here. And we don't know if they have over-the-counter options or they're just listed options. It could be that they have private options. The same thing, reflecting the same thing, but maybe they have 100,000 options, and that's what they're doing. So we don't know exactly what their position is, but I can tell you that it looks like they're shifting what is already on the table. Yeah, they're shifting that risk reward. So that's CCJ. That's what's happening there. Go ahead.
I mean, this is a really thorough analysis, and I'm thinking here, like, how much experience does it take for somebody like me to actually, get to that point like you? And how long does it even take you to, get through such a high level of stuff like
That's why we're doing it every day with you. That's why I'm trying to show you what it takes every day. I'm showing you, what you need to do, how you need to think. Remember, let's at the highest level, options analysis, blank your. Then we want technical analysis. We want to see what the technology is saying, blank your mind, and then we want to look at the story. There's 3 parts. Once you unveil all 3, does it match, right? You're putting the puzzle together. Does it match? And yes, in the options analysis, that's why I say you're in 3 steps. And when I tell you, go back again, there's so much stuff that you don't know. I know when I ask you a question, I know that you're struggling with it. Go back to 3 steps. Keep going through it. The answer's there. If you understand 3 steps, you're going to start understanding what I'm doing a lot faster. Just period. It's just period. If you're just here and you're following along, there's a lot of things I'm doing that I'm assuming that, people know, like, you've taken a course, so a lot more than the average person already, and you're starting off from a higher level. So, what we're doing is that last step is filling in the blanks, the nuances of all the different things that I'm seeing on one particular trade. Right. So what does it take? It just takes repetitiveness. It takes digging and reading, but I'm trying to be very specific with what you read. Instead of reading 50 news articles, I want you to, glaze 1 or 2, get an idea, and then go right to the CEO. Listen to the CEO. That is a news article. That's the best news article you're going to get. And keep in mind, he's a salesman. He's trying to sell you to buy his stock. So try to poke holes into what he's saying. Is it true what he's saying? Can it be true? Remember, we're always talking about, is it an easy story? Right? It's easy. Sounds like an easy story to be able to say, hey, EV cars, you're going to need nuclear power to support everything. So that's easy, right? It's not going to be fossil fuels. So these are things that are very, very important to make sure that you understand, that you're thinking about. And then, yes, technical analysis. I'm not a CMT, but I've looked at a million charts over the course of my lifetime, and you start picking up things. The way I do it may not be the best way. I'm sure it's not the best way, but everyone has their own unique. That's what makes that part unique. Options analysis also unique. I'm trying to show it to you, but unique. Technical analysis unique. And then reading. Everybody's looking at the same articles, but how do you extract what you want to start forming an opinion on whether or not it's believable? I'm trying to give that to you. How do they make money? What makes it exciting today? Those are 2 questions that are always on my mind. How do I make money? How does the company make money? And 1, how does the company make money? And 2, why is it so exciting right now, today? So when we see that CCJ and we see open interest, and because I've already done the work when we did the idea, we have to say to ourselves, this is the complete story. Options analysis is about the complete story. So we can figure out what happened today, but the complete story is what happened when those open interests, that's a lot of open interest. What happened? I'm telling you what happened. In September, October, they were coming in to buy 6-month options, and we were piecing it together back then that there's something going on here. I had no idea the whole nuclear energy was. So how did I learn that? I read the earnings transcript, and you can go back, and he's talking about, clean energy and blah, 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 but people weren't putting it together. This hedge fund was betting. They found a good bet, essentially. 50-50 that Biden's going to win. If he wins, he's talking about clean energy. We want to buy as many call options as possible because we're going to win in 2 ways. We're going to win in the direction, and the implied volatility is going to explode. Okay? And look what happened. So
Wow.
again, this is the type of stuff that it's just the pieces to the puzzle. So
Right.
how long does it take? We're only on episode 23. You got a lot. I did this every day for 20 years. So, lesson 23, 24, you're fine. Remember those 3 parts. Remember those 3 parts. All right.
And I gotta tell you, I've been watching more. Like I said to myself, 2-3 videos a day of 3 steps to profit.
Good.
And I can tell you, first time I watched it, maybe my retention was like 20-30%. Now it's higher, 60-70. I spot more things that I didn't even like.
Right,
see
you don't think
realize
about
before.
it. Yeah,
you don't even think about
the 20-minute video, and there's so much logic in the 20-minute video. So just keep going on that. And every time there's something new. We're looking at stocks, we're looking at live what's trading, and we're coming up with new things. But it's not that it's never going to be exactly the same. But if you understand the concepts, we're just moving it around. So let's go to a couple others because we see a couple others. We got to talk about silver today. We talked about it last week. Obviously, Wall Street Bets is all over the news. And they are into this silver here. I look at silver and then I look to see where's GME today. And what's interesting is this might be there's like psychological warfare, right? Like, how do I get? Here's the hedge fund guys. How do I get people to sell GME? We can try to push it down. But how do I get them to sell it by themselves? Well, there's so many people in GME, and a lot of people have gotten in a little bit later. Sure, the people have gotten in from early. They might have sold some, maybe some sold. And let me tell you that some people have sold a little bit. Okay, not all, but you see it. They're like, oh, I took a little bit of profits or whatever. I'm still holding X number. Right. Fine. But if I'm a hedge fund and I say, hey, everybody, oh my God, silver's the next one. We got to go get silver. Let's go. Everybody charge and run. The people that are in GME have a large portion of their expendable income in trading in that particular stock. So when everybody's getting excited and all you're hearing is silver, silver, silver all over the news, all over here, everybody's watching at 6 o'clock last night, where's silver going to open? People, that excitement is a human emotion. And what does it want you to do? Well, you look at silver up 20%, or some of the stocks up 20%. Silver's up 7 to 10%. You look at silver up, you look at the stocks up, and everybody's like, yeah, we're killing it in silver. And it's going to go to 1,000. And you're stuck at GME today, and GME is down $90 right now. What are you thinking? You're thinking, maybe I should sell my 1 share and go buy silver. Now they've got you, if this was some crazy 5D chess match, where people like wizardry and they're like, we need to move millions of people this way. Maybe it's a 5D chess game, and now they are using their wizardry to basically bolster silver to get people out of GME. Maybe. Now, let's talk about silver. This isn't a new story, and we said this last week. It's not new that silver has been manipulated, maybe by the banks. They've gotten fined for it at least, admit to no crime, but they pay the fines, billions of dollars. So yeah, there's probably something going on. There's spoofing in the commodities where they just try to push these things down. This is a story that's been told many times. What I would suggest for you and anyone else listening to this is, I pulled one up here, the Hunt brothers. This is Business Insider. Again, Google has everything, so you can always find something, right? I just clicked Hunt brothers, silver market, and fail, right? And I got this Business Insider, and it tells you the whole story of the Hunt brothers, built like very, very wealthy brothers in the 1970s, almost in the same type of environment where there was this debasement of the US dollar, inflation, and blah, 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 the whole macroeconomic background. These guys, they buy 43 million ounces of silver futures. You see my chart?
Yep.
So they buy futures at 16 ounce. It trades all the way up to 50. This is a good lesson. And the reason, Mark, I'm always harping on history and trying to just go look at that. Anybody that teaches, long-term capital management, I want you to go read that. Go read the book. It'll cost you $20, but you're going to learn so much. Here's an article. It's free. It tells you the whole story, lays it perfectly out. Don't skip it. I know it takes a little bit. You got to read the backdrop. Don't just skip and just go, oh, just tell me what happened. It went from here to here and down. Okay, get it. You put yourself in there. It's 1978, 79. And all of a sudden, silver starts making this move. It hits a high of $50 and then comes crashing down. And the Hunt brothers, who got so long and were up so much money, eventually what? They had to get out. And by the time they were getting out, the market had already pushed it way back down, and these guys lost a fortune. So I'll leave it as that, just showing you the picture. But to understand the whole backdrop and what happened here, this is a great article. One, I like it because the pictures here, and you can sort of read sort of the backdrop and what was going on. But then it talks about the Hunt brothers, where where they got their money and how they were, it's a good story. How they did it, what they were thinking, what they were telling the government. The government was asking, the whole thing. So this is something to learn from. And by the way, this chart, why couldn't this chart be GME, right?
Right.
And so what I've been trying to say for the last 2 weeks to the Wall Street Bets crowd is simply, I get it. I get that you have this movement. I get that you're passionate about, killing the hedge funds. You're going to kill 2 or 3 hedge funds. That's all. In fact, some hedge funds already caught on. They might be positioned for you to come in silvers. Or maybe it's the hedge fund telling you to go to silver, and now they're making money, just as much money, maybe more money than you're making. And sort of you're being used to some extent. I don't know this, but when I look at something and I say, I want you to see this chart, this could be a GME chart. And yeah, okay, you won and you knocked out, you didn't even knock him out. He's still alive. He's still kicking. Melvin Capital, he got hurt, but this guy was producing 30% returns, for 4 or 5 years. He's angry now. So now he's going to get even more, right. more upset about making money. Same thing with Maple Lane down. I heard 50 something percent. That guy, they're just going to get angry here and they're going to start using every tool they can to start making a lot of money, whatever they do. It's important that you understand that this chart, part of, if your whole goal and your whole passion is to be the little guy that stands up for something and beats the big hedge funds, it's got to be longer than 3 weeks that you're going to be in the news. And the only way it's going to be longer than 3 weeks is if you actually take some money out and you go find the next stock to do it on. Well, you're right. Now, for some reason, they chose silver. Of all things, they didn't choose another $1 billion stock. They chose silver. And let me tell you, it's hard to corner a commodity, a world commodity. It's hard. I'm not saying they can't. I'm saying it's very, very difficult. Right. And what's important again is it's nothing against their message and what they're doing. And they got millions of people now following them. But at the end of the day, it's about, you want to be passionate. You want to be an army of millions. At some point, you won the war. You won the battle. GME is a battle in a large war. You won it. And a good general in a war is going to say, we won. Let's get the hell out of here. And let's go to the next place. And we're going to regroup. We're going to eat. We're going to feast. And we're going to, sleep. And then we're going to go attack. They don't know where we're going next. And we're going to wait. So the message, I think, is, the people in that group should be listening to the moderators who've been there for the longest time, who have gotten them to where they were in GME. Maybe that's the message. The message is, be careful who you're following there. Be careful who you trust in a sea of names that nobody knows who they are. And let me tell you, I read the silver piece. I read it. And all I could think about was, this is a very sharp person. This is not your average, hey, let's just go here. This is someone who's writing something, and it's very, very specific, and he knows exactly what he's saying. He knows exactly what he's doing here. So you're trying to read between the lines. I can't see the guy's face. I don't know who he is. I don't even know if he's been around for 8 years, but he could be that, secret agent inside that is up in the, so that's what I would say is my 2 stories. But PAAS, AG, they're up. What can you say? They're all up. And the problem with being up right now is that they're all up, and their implied volatilities are very high. They're going to make you pay for everything. Okay, remember, Citadel is no joke right now. They are, they're getting medieval here. Okay, they want your money. They've lost money. Citadel doesn't lose. They have all the cards. They want your money. And so when you look at something like this, let's just look at PAAS, right? You come in today and the stock is trading 40, right? And let's take a look at the 40 calls. And right out of the gate, you're talking about implied vol that's already up, but right out of the gate, they have implied vols at 97, okay, 100. Within 10 minutes, vols all the way up to 120. This is the first 1 month. It's up to 120. What did they do? Everybody wants to buy calls? What are you going to do if you're Citadel? Okay, I'm just going to raise the prices, You want to buy more? I'll raise them more. Keep buying them? No problem. We'll raise them higher. And then all of a sudden, an hour later, the vol is down by 30 points. Now, it's only a 1 month, 3 week option, so every vol is not enormous. It might just, I don't even know what the Vega is, but you can look at the Vega and say, hey, each vol point is worth this in 3 weeks. The point is that they then take the vol from 120 back down to where it was yesterday, 93. And in fact, 93 might be high for a silver stock. Not if it's going, but the volatility traders are looking and saying, I'd love to sell 115 vol in silver. This is how they're making their money. They're not only making their money on bid offer, they're making their money on moving this yellow line, moving that yellow line from 95 to 120 back down to 95. That's going to make the money. It's invisible. You can't see it. You cannot see it, but it's invisible. So let's keep that in mind when you're trading these things, and understand that the more you trade, the more opportunity you give Citadel to make money off you right now. So again, if you're the mob, you want to pick your spots. You did a great job with GME. Pick our spots. I'm going to sit down and I'm going to wait till you buy it. Okay, at 100, I don't care. I'm setting the price. That was a great move. That whole thing, going back and forth and trading a bunch of different things becomes very difficult. When people say, "Oh, I'm getting out of AMC, I'm getting into GME and back from GME into this one," it starts becoming a trading back and forth, and all you're doing is there's a lot of bid offer in that because the spreads now are so wide. GME was the GME straddle right before the thing went down on before it was finished on Friday was probably $160, $140. I was looking at it, I was like, it's crazy. You could sell straddle up until an hour to go and it's still like $100. So they know what they're doing. They have the machines hyper focused on 30, 40, 50 names. They know what they're doing. So you just got to be a little bit careful. Bit careful.
Yeah, for sure.
Okay,
cool.
so
Thanks, Analysis.
Go ahead.
Before we jump into you, I just want to say, guys, we're approaching 2,000 subs, so help us out. Subscribe if you're not. Send this to a friend. They might enjoy it as well. So, yeah, we want to thank you for all the support, for all the comments, likes, and everything. We really appreciate it. We've been getting a lot of great emails. So it's been a great ride, and we intend to continue. All right, Felix.
Awesome.
So,
what else? There's another one that I think is interesting, which is, again, we can maybe we'll call this the day that we did some research from it. But
yeah,
the DXC. Did you see this?
Yes.
So the DXC is interesting just because, again, I'll just show you. We're doing something no different. We see DXC on the UOA. Okay, so it pops up in the UOA. Let's see if it pops up here anymore. DXC, no. You can go here to the next page. Tell me if you see it. DXC. How about this?
Maybe filter it by ticker.
Yeah, I'm gonna do it by ticker.
Yeah, there you go.
See, and then
it was there for sure.
Yeah, and DXC. Okay, so you spot it here. You got implied volatility up. Okay, it's relative volume. That means it's trading 6 times what it usually trades. 36,000 for the DXC is a lot. So you click on that, and then you get DXC here. Clearly, we don't have to look far. This is what we're going to need to look at. Now, at the money implied vol is up. The volume is here. We want to figure out what happened. So we click on March, okay? And we get something that's pretty clear here, the 30-35, okay? And we can just click on that. It looks like they're coming back for some more here, okay? But someone came in and had 10,000 at 157. So let's put that 10K at 157. And we could see that, actually, before we go, we can see that it was on the offer, 157 traded at 61.1 vol. The spread was 10,000 times. So 61.1. And let's see what happens over here. Okay, 10,000 times. Whoop, early at 32 cents. So 10,000 times 32 cents. So that's 157 minus 32 is $1.25. So $1.25 is that's what someone paid, $1.25, 10,000 times. So 1.2 million, 2.5 million. Now, I don't know what DXC is. Okay, DXC Technologies. So we can just go here, DXC stock. Okay, I don't know what it is.
Okay.
DXC Technologies. You're watching my screen, right?
Mm-hmm.
Okay, so I just want to know what it is now that we've sort of looked at what we see what we're looking at. Someone's buying to 30, 35 calls, paying $1.25. Marco, what's the most it could be worth? 35 minus 30 is $5.
$5. Yep.
Okay,
Yep.
so most
So
it could be worth.
4
Even
to
if
1,
the stock,
right?
even if the stock goes to 100, it can only be worth 5. Someone is paying $1.25 to potentially get back 5, so that means it's 1.25 to make 3.75. You see that? 1.25 to make 3.75 if the thing goes way up. So that is a 3 to 1 bet.
3 to 1. Okay.
Okay, 3 to 1. So we're looking at a 3 to 1 bet. That I just want to get that out there. Now, DXC Technologies, I'm just going to Wikipedia. No idea what they do, but I see Hewlett Packard and was founded by Hewlett Packard, spun off, enterprise service business, computer science, blah, 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 way past my pay grade here already. And they do, let's see, is there a, can I use I usually go to the website then after this. Let's just go see DXC website, DXC Technologies. Hewlett Packard. This is why Hewlett Packard and all those companies, they don't even give you a website here. So DXC Technologies, DXC Technologies. Let's see what the website is. Okay. Corporation. Delivering essential medical supplies fast. City of Milan, blah, blah, blah. Customer stories. I don't care. What do I do? Health, insurance, travel. Okay. So basically, enterprise technology that backs the whole world. Okay, it's like Hewlett Packard, right? They have enterprise technology that's in everything. Okay, so probably not super excited on some major big trend. However, a lot of these types of names, especially if you think of Hewlett Packard, could be value names. So let's go back to Seek and Alpha, and I'm going to put DXC in there, and I might look here at the news. News turns bearish. Okay, I want to read this. And, I want to see this. Okay, so Glenview's Capital, Larry Robbins reveals top pick for 2021. Larry Robbins is founder and CEO. This is Glenview. They're based in New York. Very smart guy. He uses options. I've traded at Bank of America. He was a Bank of America customer, so I know he uses options in a big way. So you can go through this article. I won't bother you by reading the whole thing, but here in their text is one of the longest running investments for Glenview. That's important to, I think, to understand. So they've liked it for a long time. So now I want to look at, DXC here. Okay, so I'm looking at my chart. So I'm getting a background. Okay, this looks pretty interesting right here. Still don't know what's really going on, but I want to look at a weekly, where it's coming from. This is a good story to understand. So he's owned this for a long time. That means he's probably bought it, hopefully not before it crashed or here. Something happened here, but it went to 92 down to 12. So something like this looks like value. Glenview is very smart. They have part of their portfolio in value and in value names. They deal a lot into healthcare, to be honest. So I see that now it starts making sense that right at the healthcare is big for Glenview. So when this is the first thing, delivering essential medical supplies fast, I just connected those dots that Glenview is in medical, and maybe this has something to do a little. Maybe the exciting part is medical. I don't know, but that dot I got to explore more. So I read this and he's long that. But there was also another article where Bill Miller, who's another famous investor, talks about. Says DXC technology takeover approach should be rejected as the offer from Atos is too low. So now we learned Atos, this company, is trying to take over DXC. So now I just go DXC Atos bid, and Atos is said to lobby its shareholders to back. Okay, so now we're getting a bigger part of the story. Atos is trying to buy this DXC. Well, if you were long the stock, let me ask you a question now. If you were long the stock here, okay, you bought it here, where a lot of these long-term investors, they're buying it back for 5 years now. They bought it here. Actually, just to give you some context, let's just go back, right? Oh, wow. So maybe they bought it here, right? Maybe the longer term guys, Bill Miller's a long term player. He buys it here. It goes all the way up to 92, drops back to where he bought it because of COVID here. But actually, before COVID, something went wrong here, and I don't know. We could figure out. We should basically go here in history and go back and figure out what happened there. But something happened. It goes down. And now they want to take the stock out from here or something, like somebody wants to take Bill Miller bought this thing, rode it all the way up to 92, drops to 12. His average is probably, especially if he starts buying it here, his average is probably somewhere between, 10 and 40, call it. So it's probably close to 20. And now somebody wants to buy it off him for, maybe $40, $45. So he's not obviously not excited to sell it if he bought it somewhere around here.
Mm-hmm.
And so you got to think about how these guys think, these big guys. I bought it. I'm not going to let some other company, Atos, come in and literally take me out of my stock. So he comes out and says, guys, don't vote for this. This is crap. The stock is worth $90-something. Now, is Bill Miller buying call options? I don't know. But I know I would think if I had a guess, wild guess, I would think we can go to funds here because we could see the holdings. I would think it would probably be like a Glenview buying buying those call options. So Glenview owns 10 million shares. 10,000 is a million shares. They might be buying those call options as a good bet. 3-1 bet. They're involved in the name, intimately involved in the name. There's not a lot of people here that are using call options in DXC. You could see. And D. Shaw is not one because these guys are volatility traders, so they have puts and calls. Bank of America is a broker dealer, so you skip those. But a few of these guys that I see here that I just glanced, like Maverick, they might use some calls, some options. But Glenview seems like the ones using calls, or BlackRock or Glenview here. And maybe it's BlackRock. It could be BlackRock too, saying we want to be long the stock because we agree there's value here, and we don't want somebody like Atos to just take it. And if they come out with a higher, maybe there's going to be a higher bid, or supposedly there's rumor. I think in part of this article is going to be $10 billion. So again, that's the story. Is it something that you could play? Maybe worth a shot. It actually looks pretty interesting. It's so specific. It's so specific what they're doing that it's like someone knows the answer, right? It's like someone is not saying that they think if they thought it was going to 70, they would just buy the 30 calls outright, right? But they're selling the 35 calls. It's so specific. Although they're coming back in here again and then buying more calls here. You see that?
Yep.
Okay, so we'll look at that here, right here at around 1250. And some of it spreads, it looks like, but I don't see the other leg happening. So maybe someone is saying, we think, no, it's popping up here too. So it looks like this spreads. They're still doing more of those spreads. Maybe they want to do 15,000, but the stock took another leg up here. So yeah, it looks like what I think about it is if this thing was really going to 70 by March in the next 6 weeks, they wouldn't be selling the 35s. But they're very, very specific. They're saying, no, I want to buy the 30s. I want to sell the 35s. I'll pay $1.25, $1.30, whatever it is. And I think I can make 3 times my money, which is how much? 200 to 300%. And what do I tell you? They target 150 to 400 is generally around where they target. So, capiche?
Yes.
Good. I want So this we went through several today, but we can do more of this. But I want to show you and everyone else. This is how we're doing it. This is what we're looking at. There's no rocket science here. This is putting the pieces of the puzzle together. It's being a detective, right? I'm happen to be a detective with a lot of experience, but you're a rookie detective and you're showing me things, and I'm just showing you the nuances of why, that may not be okay. That may not be something that's worth looking at. Or yes, that is something. So again, these are the tools. I've built these tools to give this process some path, if you will. We're learning the nuances each day. Each day there's a different story. Each day there's a different nuance. Each day there's a different thought. Each day one thought trumps another thought. That's what makes it interesting, right? That's what makes it fun to look at this stuff and dig each day. Is each one valid to trade today? I would say no. I would say some of them are just calm down. We're doing this every day. We're trying to paint the picture. And when we can get the right price, then we could strike now. Right? So anyway, that's it. Why don't we do we have a couple of minutes? just to give
Yeah,
people
yeah.
some questions. Go
We have
ahead.
a couple minutes, and I just want to ask people in the comment if you guys like this type of analysis that Felix did. Like, I really enjoyed it, and let us know if you do, so we can do this more often on the podcast as well. So, okay, let me see. Are there any questions?
You see, it's
There's
one
a
thing
lot
for
of-
me to just sit here and say, yeah, get this one, get that one. You know, what I'm trying to do for you is try to teach you how to do it
Mhm.
yourself. So
Right.
any questions? Anybody seen anything? I'll give you a couple of minutes. Go ahead.
Okay. Got a lot of praise. We had a question about. Okay, I'll pull it up here by Amar. Okay, here it is. This is when you were doing the math and all that.
How can I learn that logic? You just mentioned 3-to-1 bet. I can book individual sessions to himself.
And I sent him the link. Yeah.
Amar, the logic 3-to-1 simply comes from you're paying $1.25. The most that person can make is this one was easy because the call spread is $5. So when they're doing a call spread or put spread, it's defined. So it's $5 between the low and the high on the call spread, and you're going to pay $1.25. So if you're going to pay $1.25 for something, and I'm telling you that the most it can be worth, doesn't matter where the stock goes, the most it can be worth is $5, then the maximum profit is $3.75. That means you can lose, if the stock goes down, you can lose $1.25. That's your risk. Your reward maximum is $3.75. Where it becomes interesting is when you're looking at a call option without that finite level, where you're buying a call and it's not a call spread. How do you do it with a call, right? That's what 3 steps to profit. That's what the education is trying to teach you. It's trying to help you understand. This is how you do it with a call. Call spreads are a lot easier because it's finite. So that's really the answer. And I'll give you that one for free, Amar. Go ahead.
And tying it into 3 steps to profit, here's a question that I think perfectly fits what you were just saying. Can you see it?
I think it always repeats. Oleg. Okay, Oleg's been around for a while with us. Can you set up like a template framework that can be repeated in each session for different stocks? You know, I think the template is exactly what we've been talking about as a high level. The reality is that each day, you know, I'm gonna start with that template, that high level template in mind, and then I might switch once I get to the next level. I might say, you know what, this chart, I love this chart. I'm gonna put more weight on this chart. So it might not be that there's 50,000 options trading in calls, but I may only need 5,000, 4,000. It's not always that it's the biggest volume calls. I might need to see 3. If I see 5,000, 2,500, and another 3,000 on different expirations, that's okay. That shows me that there's activity. But when I get to the chart and I see a chart that I love, and I'm like, this is the chart, you know, I love this chart, then I'm going to put more weight on that chart. I'm going to trust my instinct saying there's something going on here, and the options are verifying what I'm seeing. So it's not like every day I need to see 10,000 options, otherwise I don't care. It's got to be over this, it's got to be over that. It's really about putting those 3 pieces together, laying them down at the table, and start imagining. And again, that's the experience part. Start imagining what's going on here. Put myself in the shoes. Not just put myself in the shoes of the portfolio manager. Put myself in the shoes of the trader. Put myself in the shoes of the analyst. What information did he get? Is it possible to get information? Are humans involved in this, or is this just like a data play? Could this just be a data play? They bought some data and they get the answer. These are all little nuances that my brain is going through and rifling through. So the framework is exactly what we're doing. We always start with unusual options activity. We get to the options chain. We're trying to analyze what happened. We're trying to look for a buyer. And then after we sort of, you know, we could take a break from there and say, okay, what am I looking at? I don't even know this company, so let me read a little bit about the company. 2 minutes. Like, what does it do? Okay, let me go back to the chart now and say, what does the chart tell me? If there's call buying and the chart's telling me it's a dud, I'm already, my brain's starting to, you know, get short circuit a little bit and say, you know what? I keep looking at this chart. I hate this chart. This chart looks so weak, yet the calls are being bought. We saw that in AMD. AMD was a perfect example. The whole world was buying AMD. Nigerian told everybody, and then everybody's buying. A week later, they're still buying. And what did we do here? We started analyzing. We looked at everything. We saw exactly what people were saying. And I just kept saying, I don't know. I'm not really sure. Like, this is not really a breakout. I don't know what. Maybe they're setting up for earnings. I still wouldn't pull the trigger because it didn't hold the 91 level, the 90 level. It went below, held, went below. That's part of the story. And I'm giving that part of the story a lot of weight. So, part of what we're doing is trying to build, it's not just the options analysis. We're trying to build up our technical analysis skills. We're trying to build up our searching skills, our digging skills, our where do we find the information. And I'm showing it to you. It's like I said, nobody's sending me, an email with like the answer. It's right there in front of us. We're laying the pieces down and we're putting it together. What I would love is for the whole community to, when we're looking at a particular name, to say, hey, this is a good piece, that's a good piece, or look at this, or this is how they make money, or this is why it's exciting. Steer us in the right way. I'm watching a Netflix show on it's a little morbid, on death, but it talks about like life after death and mediums and stuff. And I was like watching them, it was pretty interesting. And this medium is standing there, and she's supposed to be the medium between the afterlife and present. And the way she described it, I started thinking to myself, it's kind of the way I want to describe what I do. It's like I'm just looking at stuff, and then I'm sort of taking my experience and I'm trying to mesh it together, and I'm trying to put it together. If somebody could give me a couple of bullet points that I can attach to, it could only help. And it would help everyone. And once people are very good at this game, we'll have hundreds of people on this thing, and we will absolutely find 5 to 6 ideas each day that is well worth, the price of admission to actually say, I like that idea. So again, it's nuance. It's, Oleg, it's not going to be every day it's the same thing. There's 100 things, 1,000 things, but the framework is the same. Unusual option activity board, NOC, the new options chain, to the chart, to the story, and circle it back again. And then you got to sit there and kind of put the pieces together. All right.
Yeah.
That's all I got for today, man.
All right. Thanks, Felix.
It's snowing, awesome. and I'm just gonna go look at the snow for a little bit. But make sure people subscribe. Make sure you tell people to subscribe.
All right. Sounds good.
All right. Be good. I'll talk to you later.
Subscribe, please. Felix gives me a hard time if you don't. So we got to keep those numbers up. All right.
Good. Thank you.
Bye.
Be good.
Bye.